Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacino. Happy Monday morning. How is everyone doing? Hey, Waka Waka. Hey, Patrick. Wow. Market once again moving up on bad news. When will the market learn? What's the bad news today, Waka Waka? What's the bad news in your impression? So, hey, Davey. Yes, there was a nice miss in the New York State Manufacturing Index, coming in at minus 9.1, forecast minus 4. If you're looking into that a little more, the bigger thing was prices are climbing again in the subset of the data. So inflation is still not easing. It paused for about 3 months, but then prices climbing again from the manufacturing index of the New York State Empire State. We'll get the whole title in. So that's for inflation going down. That's a little another pause point in there. Inflation is holding. And then the rest of the day, not much going on. Good morning, Sterling. Good morning, Options 22. Good morning, Connor. Good morning, Martinez. Good morning, Christoph. No clue why today is a buy. uh, yeah, the thing you can walk a walk. Is that the only bad news you're referring to? That's nothing. That's a minor thing. Good morning, Anissa. Market thinks pivot. Good morning, Sasha. I just can't wait till we're done and I don't see the word pivot for a long time. So we already got the New York State Manufacturing Index out of the way. Pretty green today. Pretty green across the board. Bank of America, by the way, did beat and is up pretty nicely pre-market. Remember, I think we have 66 major companies earnings this week, and then next week is huge. So, and we're light with the market news, Fed beige book, but everything's light. You can see sectors overall so far this morning very strong. 75 basis point pulling back slightly from this pretty much 100%, but still at 95%. We're not doing a 50 based off all this data. That's just going to fluctuate. Still in negative gamma territory, so we can still get the rip your face off rallies and declines. Still in extreme fear, watching for us to pop out of that today. As I talked about, Bank of America beat handily this morning. That's the real one I was looking at after the close. I didn't mention this yesterday, but look at Lockheed Martin. What else do we have? And then tomorrow we got Goldman Sachs, good old Goldman Sachs. So keep that in mind. But really, if there's major beats by some big players, we could see especially some mega caps and more mega caps besides Tesla are next week. But Tesla, due to its weighting, if it has some interesting earnings, I'll just leave it at that. Could have some market influence. Where else do we sit? Where do we sit this morning? All right. Got asked a question because I did not cover it yesterday. Is this a 5-wave decline? Yes, it does fit into the rules of an Elliott wave 5-wave decline. So there could also be an Elliott wave buy pattern setting up today on the close. And we had the 62.5 hold from the single candle harmonics. Remember, the S&P is the one I've watched for the most strongly, and the buy pattern could trigger in the S&P unless we drop back down. Pretty much if we drop back down below that 62.5 and close below that, not only is a single candle harmonics done with a stop out, the Elliott wave would not trigger. And if this did not trigger in the next couple days, I will be going back to, we are still in capitulation conditions. Doesn't look like it's going to happen today, but capitulation conditions would probably be on something out of nowhere, like some black swan. And I'm not even talking anything about earnings. I'm talking if something happened in the world that was not predicted. Otherwise, You got to stay with, at least for the short term, from my perspective, with a slight bullish mode, just because that's where the probabilities fall. Where else do we sit? Maybe we should chart inflation. Perhaps a couple months was a sideways correction, waiting for a rotation zone to catch up. The best, by the way, the best inflation metrics, if you want to track Fed models, is from the Cleveland Fed. I don't know how to, unless I build a spreadsheet. I guess I could build a spreadsheet to track the Cleveland Fed inflation versus actual inflation. I just rather look at the numbers. Good morning, Ted. NASDAQ up 1% since that came out. You know, again, don't. So let's say we even get some missed earnings and we get some market rallies. What does that mean? We're still trying to come out of these bottoming conditions in the NASDAQ. Now, what's interesting, I mean, from the weekly perspective, what's interesting with the amount at the bottom we've been, the next cycle rotation might not be as strong. So that's really what I'm gauging. And I talk about the little cycles, which I use the stochastic RSI. When this starts peaking on the weekly and the daily, again, depending on how much of a move, will be very interesting. By the way, just because we have a potential wave 5, to clarify for all those Elliott people, unless we get a trigger on it, we could roll over and continue the count down further. We could make new lows. So that's why I'm watching for a trigger still. Key levels, intraday for the S&P. As I've talked about, if you're a trader of the ETFs like the Spires and Qs, I'd recommend watching the futures first and foremost. Minor support on any pullback, 3604. Major, 3588. Those are my two support levels. Off the open, my support level is 3641.50, which is a prior resistance becoming support level, which we've traveled through this morning. You can see pause in that area. Also, it's a key candle close right there. We got the rising 4-hour rotation zone after the first cross there. So that's the key area I'm watching for. Support. Next resistance, I'm using the harmonics, and it's pretty much a breakdown zone right here. 36.75.75, so 36.76 area right here with a breakdown zone. Then 37.01 to 37.05 is my next target area, besides modifying stuff with some intraday harmonics, and then 37.34 to 37.80.50. I can bump that up a little probably. Let me just tune in to there. Yeah, I'm going to take this level slightly higher to the official end of clear path breakdown zone, 37.44. You might see, just because, watch this high, which we've already covered, was 37.33.75, because it was also a key spike low. But those are my targets to the upside. Where does that sit in with the VIXY? So far, rolling into the open down, but 3160 is the key area. We've already filled that gap from the gap from Friday. Below that, I am paying attention to this little spike low on Friday, which is coming in around 3114, but a break below there. My target is 30.57, and that would amplify a bullish move from my perspective. If we start getting above 32.40 and start breaking below some of these key support, especially that open support range, which I talked about. By the way, that open support range, just for clarification, would be this 36.41, 36.42 area. Then I will be shifting back into slightly more bearish mode off the opening, and then getting into more substantially bearish mode above 33. That would be back above the breakdown zone, reconfirmed prior support becoming resistance. If that breaks, then we should be breaking down pretty handily. So Christo will build a spreadsheet. Hey, could you shoot me an email reminder just because I might get tied up with stuff this morning? Just shoot me an email to the support link, and then we will start a little talk. But if you want to build a spreadsheet, Christo, I'll take any help I can get at this point. Yep, BAC. Let's peek in at that. Then I'll get to the spiders and the Qs. BAC 4.5 pre-market after results. Let me get through the spider or the Nasdaq. Then we'll get to jump to spiders and the Qs. Nasdaq against my key resistance right now. This 10,965, 967. We break through that. Minor is 11,018. Then more substantial. We start getting up in here. We're into a clear path move. That is what's interesting. There's not a lot of resistance. Come on. Especially, I'm bumping up this level above 1118. I'm going to 1142. Especially, we're into a end of a single candle clear path. So we get off momentum on the open. Above 11, I'm targeting 11,042. And then we don't have, we're still into an interesting modified clear path up there, but we do have a number of stopping points. So my next target will be 11,100 to 11,112. We don't have a lot of stopping points. We have stopping points up in here, but until rising up there off the open, we do not. Support levels. Support 10,915 and then 10,869. Below 10,869, I'd watch for acceleration back to 10,73. That would be on breakdown, and that would be also if the VIX turned bearish and we got negative tick. Now let's get into other key things with the stocks. Bank of America. Interesting. This before pre-market was below Friday's high, now above Friday's high. On any pullback, Friday's high are key, especially before a full gap fill. Remember the gap fill, which I will not be targeting today unless we have major market weakness coming in, 3170. If we get a pullback, I'll be watching 3263 for key support besides using the gap harmonics. Interesting enough, if this holds and we get some bullish price action in the markets, not just for today, we could easily see a continued run up to 3370 area, which is the breakdown zone. And let's just see where it sits. The minor retracement harmonics, that would take us above the 62.5. The major retracement harmonics would be, which is the one I will so much more be watching since we're also above this 50%, would take us to this 3370 to 3393 area for my major rally point. Now let's get into the spiders and the Qs. Spiders gap up, so unless we really start breaking below in the S&P, below that morning support level I listed, we're at 363.60. Next resistance is about 363.84 to then 374.72. This is where I will use the prior harmonics. I could flip these around, but since they're harmonics, they're a mirror of each other, so there's no point. So whether it's the 25 or the 75, it's going to be that same price, 364.72. And then 367.49. 367.49 will be a very key level for me. Besides looking for the gap harmonics off the open, which will be to this pre-market or the post-market area after the open, the anchor point will be 357.67. And then I will go for that. But we have, I'm going to modify this level slightly. So I'm not using 363.84. I'm going to be using 364.08 as the first key resistance, 364.72. And then my support level is going to come in back at the 37.5 harmonic at 362.03. For the Qs, I'll still use the same gap harmonics. Again, if you are new here, you will learn about gap harmonics on this channel. 260.65 is the anchor point. So that would be my anchor point for the gap harmonics. And I'll be using the opening range. So far, we're at 266.28. So roughly my key pullback level base of that would be 262.76. But we'd have to slice through this pretty major support area. We have an emotional candle close, dual emotional candle closes. Do not ignore these key candles. See this emotional candle close there and there. That is a very solid support level. A major support level, 264.86 to 265.21 is my support zone. So can't get bearish in the Qs unless we break below that, and that's intraday bearish. Other than that, resistance 267.10 to 267.40. Then we don't have much until about 269. We do not have much. You can see there's some minor stopping points, but the major would be about 269. Merc on the DAX is the Euro lagger and is up only 10.13. Merc is also on US Dow index. Do you like Hyatt or Visa better for a daily double bottom? There's your Visa. That is, you guys are very good. Pretty much the same lows. That makes it easy to choose with that. Earnings not till October 25th. That's an easy one. Visa. Visa I do like better. Let me just see where this is headed. They're both playable. This is going to, let me take a look at the weekly real quick. The reason just from you have Hyatt, even with triggers the double, you have a breakdown zone right here in the overhead 200, which will make it, you have key things right in the way, which will make it slightly lower probability versus Visa. The only thing is you have the 50 right by here, but you do have gaps right to the first target. And this is one on going into earnings, I would be more aggressive. But that would be, and if you're trying to trade the shorter term and not hold it, my shorter term target before the full target on the double would be this 50 area and this prior resistance ledge 193.30. Peeking in on some other stuff. Notes. Nothing's really changed from yesterday. 111.18 is my first area. Then above there, I'll be targeting 112. Below 110.19, then I'll be targeting to retest the lows. Right now, it's in no man's land. Yes, the longer term potential double is still on the table. Dollar index still caught in the range. However, intraday we start breaking below 112.28. That is bullish for follow through on stocks and the financial futures. And I will be watching. We have two bottoms here and a rising daily rotation zone. So my key support is about 111.90. We break down below 111.90 could get interesting. Key resistance, I'll mark this off. Again, can't tip to more bearish mode based off the dollar until 113.15. So keep an eye on the dollar if this starts with some acceleration towards Friday's low. We already covered the VIX. Crude trying to get a bounce here. I'll be just watching this key breakdown, minor breakdown zone about 87.25. We get above there. Minor will be 88.15 and major would be 89.30. We get a close above 89.30. I'm watching for a breakout buy above there. If we break below this 85 level, I'm targeting the closer to this 82.75 area for another potential reversal play. By the way, from currency perspective, still no intervention. Little pause here. But we break up 149.77 is next area on a pullback. 147.80 is my first key level unless we have intervention. A major intervention move, I'm targeting back to about 145.20 to 146. Euro, I'm sitting on my hands unless we break down below 97 or break above 98.20. Is that a thing? It's a little more nuanced than that. You had a watch and higher volatility, more for those spikes, positive and negative between 1,000 and 1,200 when we have more volatility, and positive between 1,000 to 1,200 on more volatile days. That's going to be more telling. Hey, vertical dimension. Thank you, Sterling, for clarifying the H chart. Hyatt. Yes, please hit the like button. Thank you for reminding everybody. What else do we have? Pound. Again, they're scrapping their things short term. Little breakout play above about 113.40 to target the 114.60 area to about 114.90. But any rally up here comes into a major prior breakdown zone and major overhead resistance. So that's why it's only a short-term scalp he plays, and daily cycles getting to the top. Bitcoin, we rally. Bitcoin, my target is a 19,900 with the declining 50. Then above there, 20,100. Tesla, remember, earnings on Wednesday look like we're getting the gap up. So unless we get some gap fill weakness, we still have a potential double. But my intraday area is 216 is the first pretty much intraday 216.60 area with the declining daily rotation zone. Then above there, for all those people trying to play it to the bullish side, 221.80 to 222. Remember, the double triggers not till 226. Lower probability against the 4 hour, against the daily, and against the weekly, but the weekly is a long way off. What's interesting, if you did get the close in here on the daily basis, it does have some gaps, a clear path move, and a pretty substantial run to the other side of the breakdown zone. But I will be watching the short-term options going in for the next couple of days in Tesla. So there's the Tesla plays. Key support. There isn't a lot of key support in here, especially see this really nice clear path move. So your key support, we're at 210. Your key support, I'd still be watching the candle body areas about 207.80. And other than that, this is where I really focus on the harmonics. So support 207.80 to about 206.93. Breakdown below 206.93 and Friday's lows. 209.69 is a minor area. with the 1 hour, but you break above here, I'll be using these harmonic levels as key targets for support resistance and for intraday trades. All right. Thank you, everybody, for being here. Thank you, Legion Reaver. Thank you, Lauren. And I am wrapping it up, going into the open with a final little check. Same key levels. Nothing's really changed. If you're watching the open, your minor level 36.76 is what I'd be watching for, this area going into the open on a rally, and the support's still back 36.41 to 36.42 area. I'll see everybody after the close. Thank you, William. Thank you, Anissa, unless something major happens during the day, which I would pop in at lunch. On the day for the Russell, the potential double, it is still valid on a daily trigger. You can use a daily trigger, especially with that 50 out of the way. So the 50 would be a close above that on the daily basis, would be a legitimate trigger for that double bottom. And by the way, those targets are modified to this side. And the first and second targets, and the first would be an aggressive stop reduction. Why? It's at a key resistance point also. Going into a, that is a correct trend line, by the way. This is the defining point. So this would be definitely an aggressive stop raise area. Oh, did we hit over 6K subscribers? My rants must have done it. Well, thank you. Thank you, Josh. Again, keep hitting that like button to keep the channel growing, and I'll talk to everyone later. Bye for now.